Hey everyone, and welcome to this weekend's edition of the Strategic Swing Trader. This is Sami Abusaad with T3 Live. I hope everybody's doing well, having a good weekend so far. I would like to go ahead and take a look, start off by taking a look at the market. As you can see, the SPY, the S&P 500 is falling a lot in the last this month. It actually has reversed. Um, well, this is June. It's reversed basically the last 5 months. Since the beginning of May, we're back to prices not seen since May 3rd. So it reversed May, the entire month of May, June, July, August, September. So 5 months of worth of gains got completely reversed in less than a month. And that's why they say, which is true, that bearish markets last between 1.5 years to 3 years, whereas bullish markets between 5 to 7. So what takes 5 to 7 years to build gets destroyed in 1.5 to 3 years. If we look at the larger picture, if we look at the monthly chart, you can see that we've probably printed so far. The month is not over, but it almost is. We just have a couple more days left. We've printed the biggest red bar probably we can see on the chart going back to 2008 when the market was in a free fall, right? But this is probably, even back then, I mean, this is probably the biggest bar that we can see looking at the monthly chart of the SPY, which is the tracking ETF for the S&P 500. At the same time, the SPY is at support. It's at the rising 20 on the monthly, at prior pivot low also, which is support. So you'd expect to see the market bounce a little bit, or at least stabilize, pause a little bit before it continues either to the downside or goes back up. Now, I've been saying since October 4th, I've recorded 4 videos on why I think this was the real top. Since, again, October 4th, you can go back to the Black Room playlist and you'll find 4 videos, the first of which was recorded on October 4th saying this was the market top. Then the second one was on October 10th, and I don't know when the last 2 were recorded. But this was definitely the top. So even if we move back up, we're not going back all the way to the highs. Definitely not. We might move back up, put in a retracement to 275 or so, maybe reach the declining 20 on the daily chart for now, but we're not I don't think we're going back up anytime soon. If we look at the QQQ, which is the tracking ETF for the Nasdaq 100, it actually has a little more to go to maybe 160 on the monthly chart. And then if we look at the daily chart, there's nothing to suggest that we've actually ended the downtrend. There's nothing to suggest that at all. I thought we might double bottom on Friday, but we really didn't. And the downtrend is still intact on the hourly chart. So there's really nothing to suggest that we've bottomed yet. We'll see. The market gaps a lot every day nowadays. So we'll see where we open at on Monday, and that would give us a clue at least for Monday morning. Notice that we have not put in 2 green bars in a row this whole month, right? Every green bar, we didn't get any follow through in any of these green bars. Green bar, the next day red bar, green bar, red bar, green bar, red bar, green bar. We got another green bar, but it doesn't really count because we closed below where this green bar closed, right? To get follow through, you need to close above the prior bar's high, right? That's what you need, and we don't have that at all. So there's nothing to suggest that we've bottomed yet. And as far as swing trades, you got to be cautious because the market gaps so much. So I made pretty penny on the way down, a really nice chunk of money on the way down, this initial move lower. And then ever since, I've been kind of sitting on halves, just 3 positions at a time. At the moment, I have the JELD short. That's working nicely. But this is a different strategy. It's independent of the market completely. It's a gap strategy that I play. So I've been kind of taking it easy. So let me show you, and I'm going to continue to take it easy. going into next week. But let me go ahead and show you some of the names that I'll be watching. First, we'll look at the bullish list. We have Amrin. I mean, just look at this monster. Look at this beauty. Market crashing, negated 5 months worth of gains. This thing is at the all-time highs and basing. What's not to love? I already have half a position in it, so I already have a position in the Amrin long, but I'm looking to add to it. All right. So Amrin is one stock I'm looking to add. The list is sorted alphabetically, not by uh, importance or quality. The BDSI is a daily buy setup. I don't love the daily buy setup because it already triggered and produced a big green bar. I almost never play long unless after a big green bar, right? I wait for a resting day before I go long. But if you look at the monthly chart, I mean, this is phenomenal. This is the four-stage cycle, and here we're going back up, right? Transition A from stage 1 to stage 2. So I love the monthly chart, and I'm willing to take a shot at it. I'm not in it. I kind of should be. I'm in the FEYE also long. This is the same picture, same exact picture. And it's still okay, but there's no setup on it for Monday or early next week. These symbols that I'm showing you, I have a lot more. I have probably 2 dozen other bullish setups, 2 dozen other bearish setups, but I'm only sharing with you the ones that I think might be good for Monday or Tuesday, early part of next week. So something like the FEYE, while it looks just as good as the BDSI on the monthly chart, it doesn't look good to be looking to get in it early next week. But I do already have a position in this too, and I'm looking to get into the BDSI. ONCS, same exact setup, monthly, transition A. So it looks good too, as a long-term play, okay? If you want one more long-term play, WDR, same exact setup. Now, I don't look at the same setups because I'm a boring kind of a guy, trader. I might be boring, but because in repetition, we have a huge advantage. We have a really huge edge in focusing on repeating patterns, high quality patterns. So BDSI, ONCS, WDR, FEYE are basically the same. The OZK is completely different, and it's a gap fade. So you get a stock that's down a lot, puts in a big gap, and pushes back up. I did the AKRX. I'm already out on the gap up. It gapped up. I'm not sure which day. This day, I think, or maybe this day. I'm not sure which day. But you see, this was a big gap down and moved up a significant amount. This might not look like a much of a move. Oh, I trust me, this was a big move. 571 was the entry, and that's $1 on a $5 stock. That's 25%. Okay, the bars look small because of the size of the gap, so it kind of squished everything. But this was a big move, and so the same we have on the OZK, potential reversal all the way back up to about $32. So I like the OZK long. Some of the short setups, I have bro. It's a kind of an hourly base breakdown more than a daily. You look at the hourly chart. So I like it under the lows, stop above. And the larger time frame perhaps is also Climo. It's one of the very few stocks that haven't fallen that much with the market. So it has room to about the rising 20 on the monthly chart, which is about 25.50 or so, $26 maybe. So I like it. LMAT is very, very thin. It has an M pattern shaping up. So here it is, M pattern. So under the neckline, stop above, okay? But it's very, very thin. I prefer not to talk about it too much. MLNT is a base breakdown. Looks lower. It's a low price stock, but I don't really discriminate based on price. I don't care at all about the price of the stock. Could be $280, could be 280, right? $2.80. Doesn't matter. The price, it could go to zero, right? So I like it, but also a little thin, so be careful. MNK is a 1, 2, 3, and then if we trigger short, it would be it would be called a 1, 2, 3, 4 breakdown play. Okay, 1, 2, 3, 4 breakdown play. So I like it under the base, and it's also a monthly sell setup. So MNK as a short. I already played the MNK as a climactic short, and here it is. Actually, I'll show you the weekly chart because it looked, I mean, how can you not love the MNK up here? Look at this. So I played it short, got out on the gap down and the wide range bar. No, I'm not sure honestly if I got down there, got out. Oh, I got out half there and half here. And now I remember, half there, half there. So this was excellent, but it continued falling, and now it's setting up one more time for a breakdown play as a breakdown play. The NTB is an hourly breakdown. Looks okay off the declining 20 on the hourly chart. OLLI I like a lot. It's a daily sell setup coming after kind of a transition C. So here's the uptrend, minor base breakout failure, by the way, and then now we have the breakdown, right? Short right here, stop right there, and then the target would be the monthly 20 MA. So far away from it, has a lot of room. I would take target one actually around $78 or $80, and then target two around the 20 MA on the monthly chart. PayPal, this is a bit tough because we had a professional gap up that day. So this is has support below. It does have a minor void below to the top of the base, so it has a little bit of a void to here, right? But this is tough because it has a strong professional gap. What I like about it is the rounding top. Every single rounding top has a breakout failure. Where's the breakout failure? Here it is. Okay, so every single rounding top has a breakout failure. Rounding tops have significant amounts of supply in them, a lot more bearish than V-tops like this that consist of 1 to 3 candles. See this? That's a V-top. That's a rounding top. A V-top, stock dropped a little bit. A rounding top, huge fall. So it's got a good rounding top above that's probably stronger than the support below, and I think it does fall to probably $78. Okay, on the PayPal. I like short. Square was probably my best play this year as a short. Played it here and covered at the bottom. I did cover half the day before, but I covered at the bottom. And I flipped it long, and I made $10 or $11 per share on the flip. Now I'm out. I wish I had shorted it on the breakdown here, but it had a big gap down. So right here under the base. It's still not really, it was at $73, should have been the entry. It's not too far below it, below the correct entry, around $73. So I'd like to see if I can get back in it. I think the square SQ gets back down to about $50. Mark my word, this is coming back down to about $50. So I'd like to figure out a way in it. The issue is you have to get in on a good entry, because if you don't, you can easily get stopped out, get shaken out, and the stock might still get to the target to $50, but without you. So you have to find a really good entry, and that's the trick, because we don't have a very good entry at this point. But we'll see. SERV is a $1 stock, but has a beautiful breakdown play on the hourly chart. So I do like it short, stop above the base. WPM has a weekly sell setup, if I recall correctly. Yes, it's triggered already. And this is the beauty of doing a 1, 2, 3 short, is the play could have already triggered, which in this case it did trigger, but you can still play it as a continuation when you get a continuation 1, 2, 3 breakdown. So short under the doji bars low, stop above it, and target the prior pivot low. Okay, so those are some short ideas. I feel like I gave you about 8 or so short ideas, but I didn't really give you as many long ideas. If you want some other backup ideas, as I said, I always have more, but I just don't want to overwhelm you. Let me show you some more, I guess. The digitally, for example. This looks good because we have a breakdown failure, but it printed a big green bar yesterday. So I'd like to see a narrow range bar Monday and then a breakout above the base. It looks okay on the monthly. I said it looks okay because, as you can see, the 20 MA hasn't fully flattened out and curled, started to point up. So like the BDSI, like the FEYE, like the WDR that I showed you. So that's the only issue there. But the weekly looks pretty good also over the base with a shakeout bar. So I like it, but probably more for Tuesday than Monday. And IHD, the market fell apart on Friday. This printed a wide range green bar. How can you not love the relative strength? Has a lot of relative strength. So I'd like to also get a resting bar or a doji bar on Monday and then look to play it as a breakout above the base. Xilinx, well, the market fell apart last few days. Xilinx gapped over a wide range green bar, which is a mortgage gap. This is called a mortgage gap. Trapped the shorts and printed a big green bar, and now a narrow body bar. This is not a narrow range, it's a narrow body, and it looks higher. Base breakout on the hourly chart, so it's not too bad. Not too bad. And then YNDX, I would probably be okay playing it long over the base if it weren't for the fact that it's reporting earnings on Monday. So I'm just gonna watch it for Monday to see what it does after the close. And then if it opens flat on Tuesday, then I might play it swing. I actually played it 2 days in a row, swing, when I was in New York City doing the mentorship class. Played it long this day, played it long this day. Both days worked beautifully as a climactic buy intraday. See this? Intraday. And then this day also. So those are some swing ideas. I think Twitter also is not too bad as a possible long. Might go back up. It had a beautiful transition A on the monthly chart. I took it to 32, I think, and then I got out of it and it went to 50 almost, 47, 48. So now we have a pullback. It probably needs to stabilize first before it goes back up. But this was very, very bullish on the gap that happened on Thursday. So I'm gonna keep an eye on the Twitter. All right, well, that's all for this video. I hope you enjoyed it, and definitely enjoy the rest of your weekend, and talk to you guys next week. Take care. Have a good night.